Good morning. Thank you for tuning in to another pre-market pulse scan. Today's pre-market pulse scan is for Monday, December the 19th, 2016. The time is 9:13 a.m. Eastern Standard Time. Taking a look at the overnight markets, the Dow futures hit a high of 19,843 and a low of 19,794. Last price 17,799, up 5 points. The NASDAQ 100 is the last trade 49.2275, up 7. The overnight high was 49.2550 and the low was 49.13 and a quarter. The emini S&P 500 futures last trade is 22.56 half, up 1.25 point. The overnight high was 22.6075. Overnight low was 22.5575. And as far as the NASDAQ 100 futures, it's up $6.3 points. Looking at the Russell last trade is 1365.60, up actually down a half a point. And we're looking at overnight high of 1368.40, low of 1364.30. Looking at the Nikkei last trade 19,405, up 40. The high was 19,480 and the low was 19,315. Looking at the crude oil futures, 52.75 last trade, off 20 cents. Overnight high 53.60, overnight low 57.5. US dollar index futures last trade 102.96 half, up about 4 ticks. Overnight low 103.07.5 and overnight low 102 half. Looking at the euro down about 7 pips at 104.72. Overnight high was 105.26. Overnight low was 104.57. Looking at gold futures last trade 1140.10, up $2.70. Overnight low 1144.10. Overnight high was 1144.10. Overnight low was 1135.50. And silver last trade is 1609, down about 12.5 cents. Overnight low was 1626 half. Overnight high was 1626 half. Overnight low was 1604 half. So pretty much muted, quiet markets. I don't expect any type of fireworks this week. It's the last trading week here as far as Christmas week is concerned. I don't see a lot of things happening, but it could be possible. And looking at the historical record, like I said, the biggest one-day move in the Dow futures history was 1,200 points to the upside during the holiday season around this time of year. So anything is possible, and who knows? But normally during the holidays, it's thin volume, light trading, extremely narrow trading ranges, and then things pop off the last week of the year. So not this week, but next week is usually when you see like this huge run for the window dressing purposes, which we talked about before. But again, anything's possible. We live in uncertain times, and anything is possible. With that said, let's get into the weekly pulse wave price triggers. You will note today that there have been a weekend overnight, upgrade to the system here. What is on there now, what you will see, is I added a new tab. So the weekly tab is there now. That's going to be your main tab for the week. All right. That weekly pulse wave chart is your master sheet. Okay. So use that as your reference every day. Every day that you get the weekly pulse waves, when those price triggers come out, that one tab will remain the same because it's the weekly tab. Everything else is a daily tab. So use that master sheet to guide you as far as where to go. You'll notice that there are major changes there. The columns read from left to right like this. You have your closing price, let you know where the market closed last week in relation to the trend line resistance and the first pulse wave resistance, or your buy entry. Then, of course, there's your positive momentum column. There's your stop loss, which is going to be your sell stop. And then to the right of your stop loss comes your uptrend reading. And then next to that is your closing price. Again, I put it there strategically to separate the green side, or the positive momentum side of the page, from the negative side. After the closing price, you have your downtrend reading, your negative momentum reading, and so that is separated like that for you. So that way you can get an idea of what your indicators are, as well as the other thing that I wanted you to see, such as what's happening in the market. So again, closing price, trendline resistance, your buy long, which is your first pulse wave resistance, positive momentum, sell stop, uptrend, downtrend, negative momentum, and then closing price again, so that you can get an idea of where everything is, because I want you to see that. The closing price is important. So in line with that, keeping with that, the next thing that you're going to want to notice on here is where everything is in relation to where the market is. So this is your master sheet. Just remember that. This also serves a dual purpose. It also is your rookie sheet. All right, because I want the rookies to be able to get up to speed on the system quickly and how to read it. So I simplified the tab there for you, so it's simplified. So you'll know exactly what you look at. You can read it immediately, know where to buy, what price to buy, where to put your sell stop, and that's it. That's all you need to know. What price am I getting in, and where am I putting my stop loss? That's it. The other things on there is just your indicator reading, so you can get an understanding of what type of market you're entering. That's the purpose of those readings, to inform you of what market am I getting into. And that is the most important thing on the tab itself. Okay, so if you, and right now I'm looking at the weekly tab. I just want to look at the weekly tab real quick. On that weekly tab, you'll notice that I'm having some of the members in there work with me on that sheet, because I'm trying to overhaul the sheet to make it more effective, if you will. Make it look better, make it run better, make it run smoother, make it easier for people to read the sheet and know what to do. So I'm working on it. But you'll see that there's a lot of rally alerts on the sheet. You'll notice that there are at least over, it's about 700 securities on that sheet, ranging from forex to futures, you name it. Securities from all over the globe on there, indices, you just name it, it's on there. And you want to, that's the first thing you're going to pay attention to, is where are your rally alerts coming from today. And you're going to want to play that and know what you're looking at. So let's look at the in play tab now. Let's switch over to the in play tab and let's get right into it. All right, key rally alerts for the day are many. There are many rally alerts on the sheet. Numerous. The first one we're going to look at is the possibility of gold. Gold futures looking, being watched for a rally alert today. So there's a strong possibility that that will happen. But you also got to look at the other side too. It's in a locked in downtrend, and you have negative bot checks, and you have negative swing Vix. So that's a miracle if that happens, put it that way. If the market can turn and bounce from there. If it's going to bounce, then it's going to trigger that pulse wave. If not, then it's not going anywhere. You got a possible rally alert on UGLD, USLV, DGP, Gas L, FAZ, the FAZ. That one has a possible rally alert. We'll have to look at these and see. And someone had asked in the room, what did the D stand for under the ticker symbol? Well, that's a system output from the exchange. Supposedly, it's supposed to stand for daily data, you know, on looking at data from the daily chart. So that's supposedly. So just wanted to throw that out there. It's really, as far as for all intents and purposes, it means nothing to you. All right. Nugget has a possible rally alert, so you have to watch that. Pretty much all the whole entire gold and silver space, the bull side of the equation has rally alerts. Sugar on the future side has a rally alert. The euro has rally alert. Crude oil has a rally alert. And crude oil already, looking here, already did that. It actually gapped up on the open. So it's already triggered in the overnight the pulse wave. So it's already playing into its rally alert. And we did hit high 53.60. So the crude oil futures is already doing it. Look out for NAC, NAK. NAK has a rally alert. Let's see here. The inverse dollar index, UDN. Got to watch that one. Let's see. Pretty much the euro space. There's also the ultra euro has a rally alert, ULE. So either this euro, either the euro is going to break out, and the dollar should continue to pull back. So that's what we're looking at here. It's looking at systems looking at the possibility of shorting the dollar and getting long the euro. So basically, the oil, euro, gold, and silver have rally alerts for the day. And on the stock index, the silver is looking at the possibility of shorting the stock index by getting long the inverse QQQs and all of that, like SQQQ, SDAO. Got to watch those for possible triggerings. And Pretty Ricky has a rally alert, looking great. Looking at Pretty Ricky. GDX also has a rally alert. Now I don't see GDXJ, but let me just keep looking. Does GDXJ have it? Nope, just GDX. But it'll probably take GDXJ with it. And I'm noticing that UWTI and DWTI are still coming up. So I'll work on getting that removed from the entire system. I know I removed it from certain segments of the system. I thought I removed it from the whole thing, but I didn't. You got a lot of swing trade alerts on here too. Apple Computer, Bitcoin, which has been going gangbusters, that has a swing trade alert on, let's see, DGLD, DSLV, which is funny because the UGLD and USLV have rally alerts while these have swing trade alerts, but the DGLD and DSLV have crash alerts too. So this is going to be very interesting to see the crossroads of things. JDST has a rally alert. I'm sorry, not a rally alert, but a swing trade alert, and it's still in the overall locked in uptrend, so that's a good thing. Let's see. Okay, let's look at some crash alerts now, just real quick. Don't want this video to be too long, but then again, it is what it is. Let's see here. All right, there are a lot of crash alerts. FAS, the financial sector, FAS has a crash alert. So does Google and Facebook and Netflix, the dollar, the ultra short euro, obviously. Let's see. Okay, Apple and Bitcoin also have crash alerts, even though there's a swing trade buy alert on the Bitcoin. So one of these, so that means it's in an imminent breakout thing right now. So it's going to break out or break down. Let's see, looking at treasuries. Okay, on TYO, that's the inverse ETF for the bonds. It has a crash alert, so that means that bonds at a crossroads are breaking out or breaking down too. Very tight trading range there. Looking at, let's see, dry ships has a crash alert. The euro yen, which represents The global stock indexes has a crash alert. The yen itself has a crash alert. And the US dollar index has a crash alert followed by a swing trade buy as well. So either we're going to have a continuation pattern in the dollar, or it's going to start that rapid decline and correction. So we'll see. We're at a crossroads and we're at the Christmas week. So I'm expecting most people to take off for the week and just go shopping, last minute shopping and traveling or whatever. We'll see. Like I said, I'm wrong more than I'm right. But remember what I always teach you. Even if you are wrong, you want to position yourself to make money. That's the difference between being an analyst and a trader. When an analyst is wrong, they're just wrong. And there's nothing they can do about it. They can't recover from it. Except for to be right on the next call. That's too exhausting trying to be right all the time. That's impossible. You're not omniscient. But if you have a robust system and strategy that can help you so that when you are wrong, you don't get your face ripped off. All right? But have a mechanism that is self-correcting to put you on the right side of the market. That is the difference between an analyst and a trader. Analysts are wrong majority of the time more than they're right. Traders, however, make money when they're wrong, and they make money when they're right. That's the difference. Can you say the same? Can you do that? If you did not have a bang out week last week, then you need to come over to pulsewavetrading.com, learn how to become a successful trader. There are many traders, but most traders lose 95% of the time. Only 5% of traders are continually and consistently successful in trading. There's a reason that why most people lose. And there's our opening bell. There's a reason why most people lose, and that's because they don't have a robust set strategy and system to be able to lock in profits and cut losses. PulseWaveTrading.com. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. See you at the trading room. Peace.